Good morning, everyone. This is Dana from NexGen, and I hope everyone has had a fantastic week. As we close out 2023, I want to wrap up our case study with multi-generational married couple Gregory and Natasha. So, baby boomer Gregory turned 59 yesterday. Happy birthday, Gregory. And Gen X Natasha is 50 years old. Now, for the past couple of months, we've been discussing the ways that these Army veterans used their home equity and how they were exploring reverse mortgages, specifically home equity conversion mortgages or HECM. And I'm going to include a link above. A reverse mortgage loan is like a traditional mortgage. It allows the homeowners to borrow money using their home as a security for the loan. And also, like a traditional mortgage, when they take out the reverse mortgage, the title is still in their name. However, unlike the traditional mortgage, when you have a reverse mortgage loans, the borrower does not make monthly mortgage payments. The loan is repaid when the borrower no longer lives in the home. So interest and fees are added to the loan balance each month and the balance grows. Now, this is going to be important when we talk about some of the things that you need to look out for. So with the reverse mortgage, the homeowners are required to pay the property tax, the homeowner's insurance, use the property as their principal residence, and keep their home in good condition. Now, the part about the property being as their principal residence is very different from any other mortgage package that may be out there because the reason for the reverse mortgage is so that the senior can stay in their home. And I'm going to talk to you what I mean about what categorizes the person as a senior. So, according to the U.S. Department of Housing and Urban Development, reverse mortgages are increasing in popularities with seniors. And when we talk about seniors, we're talking about people that are 62 years old and above. They have equity in their homes and they want to remain in their homes or supplement their income. Now, out of the three reverse mortgage programs that I talked about in previous weeks, the HECM is the only reverse mortgage that is insured by the U.S. federal government and is available through the Federal Housing Administration approved lenders. So the Federal Housing Administration, or FHA, falls under the U.S. Department of Housing and Urban Development. Now, the HECM can also be used to purchase a primary residence. And I'm going to leave a link in the description below so that you'll have updated information. So let me give you an example of a new purchase. Let's say that the home that the senior lives in has stairs and they would want to have one that's like a ranch style or one level. Well, they can use the HECM program to purchase a primary residence as opposed to using it for a residence that they're living in. So that kind of gives you an idea of what is it and who can use it. Now, there's some things that you need to look out for because it's for seniors 62 years and older. There are going to be some people out there that are going to take advantage. So there's some things that we need to be that we need to look out for. And the one that I want to talk about is contractor scams. Now, whether you're a senior or not, you should always be on the lookout for people who are going to be unscrupulous vendors or home improvement contractors that take your money but don't give you the service that they promise. So sometimes there are contractors out there that will pressure seniors into getting reverse mortgage loans. And then once the senior gets the mortgage loan, to have the home improved or for the work that they need to have done, the vendor or the contractor will take the money and not do what they're supposed to do, or they won't do a quality job, or they won't deliver it as promised. Because one of the things that the senior needs to do to get the or to keep the HECM is to make sure that their home is in good working order. So, unfortunately, there are some relatives, caregivers, and financial advisors that also take advantage of seniors, either by using a power of attorney to use the reverse mortgage to take the money, or to convince them to buy a annuity or something that they really don't need to do. And sometimes the only thing that the senior can do is to obtain a reverse mortgage. So not only do you have the contractors that you have to look out for, but you also have some unscrupulous relatives and financial advisors that don't look out for the seniors. And unfortunately, there's another scam that actually targets veterans, and that's why I wanted to let you know that Gregory and Natasha are veterans. So the Department of Veterans Affairs does not offer any reverse mortgage loans, and there's some ads that would promise veterans special deals or imply that they have VA approval, or offer what they call no payment reverse mortgage loans to get the older Americans that are desperate to stay in their homes, because that's ultimately what this program is for them to stay in their home. So along with being 62, making sure that the taxes are paid and the insurance. And the reason why, and in some cases, if they have um, homeowner associations, so there's different things that need to be paid in addition to the mortgage that does not have to be paid. But the homeowner has to make sure that the taxes are paid, because if they're not paid, or the insurance is not kept up, or the house is in disrepair, then the reverse mortgage borrow, lender has no choice but to foreclose on the home. So if the house falls in disrepair, or if the taxes are not paid in a timely manner, and that includes the insurance, they need to make sure that these things are done, because this can actually trigger a foreclosure. So these are some of the things that the reverse mortgage borrower needs to know. And again, I'm going to include some information in the description below, and also at the end of this video, I'm going to include the playlist to go through the equity process, because reverse mortgage may not be the best choice. And that was what Gregory and Natasha found out, because when they looked at how much they could get once they qualified, they found out that the older they are, the more money they're going to get. And I'm going to show you that in just a second. Okay, now this is a snapshot, because the amount of money that the borrower would get would be dependent upon the age of the youngest borrower, and I actually talked about that in previous videos. How much the home is appraised for, and the interest rate at the time the loan is made. And that changes every week. So this one was captured November 3rd of this year. Now, I did change Gregory and Tasha's age, because at this time they do not qualify for a reverse mortgage. So I actually made Gregory 53, and excuse me, Gregory 63, and Natasha 55. So the home is appraised at 500,000 at the time this was done. The the interest rate was 8%. Now, this is from one of the lenders. So every lender is different, but in this case, we use their reverse mortgage calculator. So with Gregory only, and I think this would only happen if he removed Natasha from the title of the home. And that in it of itself could cause a challenge as well, especially if something happens to Gregory. Because if something were to happen to Gregory to where they were no longer in the program, then they would have to repay the loan back in full. So in this case, with the appraised value of the home at $500,000, he would get for the adjustable rate, and there's a couple of ways that you can get it, and then I talked about that in previous videos. But in the adjustable rate, he gets $134,609. So $70,809 is available at closing, and the remaining $63,800 will be available after 12 months. Now that's for this particular program. So if he wanted a lump sum, now again, this is out of the appraised value being 500,000, and they have no other liens. They actually um, have the house paid off. They would get $60,101 at closing. Now, keep in mind, this looks extremely light. And if you think about it, they're expecting Gregory to live a long time. And if you've had done it the other way, you would realize that the lender has a responsibility to make sure that the balance doesn't exceed the appraised value of the home at the time they did the loan. So you understand with 8% um, on this particular one, now this is on a fixed rate, 8%, but of course you've got the adjustable rates too, that this can easily go into almost $1 million that they would be owing. So if we were to have the it borrow even though Natasha in this next scenario, even though Natasha is not the over 62, the amount that they would receive for the reverse mortgage would be dependent upon Natasha's age. So you can see that it's considerably smaller. 112,886, and a portion of that, $57,686 is available at closing, and the remaining $55,200 would be available after 12 months. So that's with the adjustable rate. Now with the fixed rate, it would be $47,486. Now, I will tell you, when Gregory and Natasha is are older, and hopefully the appraised value is increased right along with it, they're gonna get more money from the from the reverse mortgage. So this is just a snapshot in time to give you an idea of how much you can expect from a reverse mortgage proceed. I hope this information was beneficial to you. This is pretty much what I wanted to show you as far as what you can do as far as getting home equity out of your home. They explored the regular you could either this is what you would get out of the home without selling it. So that's one way to get equity out of the home. So one way would be to sell it. Another way would be to get a regular loan, whether it be a loan for a portion of the house equity, if you will, or whether you did a line of credit. So again, I will have the information from the playlist for you so you can take a look at the different options. But At the end of the day, the most important thing is even though with the HECM program, you're going to be talking to a counselor, it's best to have research the information for yourself to make sure that this program meets your needs. Again, thank you for stopping by. Don't forget to like, share, and if you need to, go ahead and comment and share some of your experiences that you may have had with this program. And have a fantastic new year, and I'll see you in 2024.